We are already 3 weeks into what is a busy 2025 real estate season. We're coming fresh off the heels of the busiest December since 2020, with a 56% increase in number of transactions versus 2023. We're also seeing that inflation is still rearing its ugly head with a 5.9% rental increase from La Régie du Logement. This also comes off a 4% increase last year in 2024, which means tenants in the last 24 months have had an increase in rent of 10%. This will affect the 2025 real estate market in these 3 ways. Let's check them out. Effect number 1 may be an increase for buyers' inventory, as some tenants may exit their apartments or condos that they're currently renting for cheaper options in the suburbs. This allowing the sellers to liquidate their asset and get out in what is a very competitive real estate market. Number 2, the return of the small investor. What I mean by a small investor is a client that potentially has 1 or 2 small multifamily units. It was very difficult to create cash flow with those units in the last 24 months as interest rates were quite high. As interest rates continue to slowly come back down to rates that we saw in 2019, the return of that investor may come back to the market, especially with the 10% rise in value of rents in the last 24 months. Effect number 3, tenants becoming owners. Tenants finally jumping into the real estate market after they starting to realize that rents will continuously move up. Seeing the 10% increase in the last 24 months, the tenants that have the capability to have a cash down may jump into the real estate market given the cheaper mortgage rates as well. So expect those entry-level condos to be quite competitive in 2025. For more real estate tips and news, follow us on all our social media platforms. And if you want a detailed plan that's what's best suited for you, whether you're buying or selling, contact us now at the Lacasse Shapcott team.